As we approach 2024, experts are divided on the future of the housing market. Are we facing a downturn or uncovering opportunities for investment?
That's the pressing question. Today on Financial Insights in Minutes, we'll summarize the latest expert analyses on this hot topic.
From housing trends in Texas to economic forecasts, we aim to equip you with the insights necessary to navigate the year ahead.
Let's dive right into the summaries of today's standout videos.
This segment is brought to you by Reventure Consulting. Today, we're exploring an unsettling trend. Why are billionaires such as Bill Gates and Jeff Bezos acquiring vast swathes of farmland across America? Hold on tight as we navigate these murky waters.
Indeed, it raises critical questions about the future of food supply and ownership in the United States. Let's uncover the reasons behind this land acquisition frenzy.
So what's the central thesis here?
It revolves around insulation from risks. With escalating global uncertainties, billionaires view farmland not only as a resource, but as a hedge against inflation and instability.
Let's break down the key points, starting with those staggering land acquisitions.
Precisely. Gates and Bezos are among the top landowners, leveraging their wealth to secure agricultural resources in anticipation of future market demands.
What about the alarming increase in farmland value?
The surge in farmland value is impressive, 400% over the past 25 years. But with current crop yields dropping, are we approaching a bubble?
What's the status of smaller farmers amid all this?
Smaller farms are rapidly vanishing, pressured by larger conglomerates controlling more than 50% of the crop outputs. This shift is concerning.
What about international players investing in U.S. farmland?
Countries like China are indeed making moves to control farmland, raising alarms over future resource management. Legislators are pushing back.
What are the predictions surrounding farmland values?
The decline in crop prices hints at a potential bubble, reminiscent of the catastrophic downturn in the 1980s. Definitely one to keep an eye on.
To wrap things up, what's the major takeaway here?
The concentration of farmland ownership in the hands of a few billionaires increasingly jeopardizes local autonomy and raises significant questions regarding food and water security.
And finally, we want to hear from you. What are your thoughts on billionaires buying up farmland?
Drop your comments down below. Your ideas about the future of land ownership matter.
This segment is brought to you by Real Estate Mindset. We're diving deep into the turbulent waters of the economy. What challenges could lie ahead? Strap in. This is our survival guide.
Joining us today is Mitch Wexler, a quantitative finance expert and seasoned developer. His insights are essential as we analyze government spending, the housing market, and what's brewing beneath the surface.
So, what's the big picture here?
Mitch emphasizes that inflation remains high, yet the government presents an illusion of prosperity. The data suggests we're heading towards a severe economic downturn.
Let's break down the situation with the stock market.
Mitch argues that while the market appears robust, this is misleading. High employment figures don't accurately reflect real economic strain.
What's key in understanding these indicators?
Using formulas from quantitative finance, Mitch illustrates how volatility impacts property value predictions, which is crucial for homeowners.
And what about property taxes?
Current assessment districts manipulate values, leading to inflated taxes that burden homeowners. It's time for consumers to push back.
How does apathy factor into this crisis?
Mitch highlights that without public engagement, fraudulent activities flourish, creating dire consequences for many families.
What does Mitch foresee in the months ahead?
He predicts an economic downturn as debts soar and property values plummet. Urgent reforms are needed to address these issues.
Looking forward, what can we anticipate?
Mitch warns that the current economic trajectory could lead us into a recession if significant policy changes don't occur soon.
What does this signify for homeowners?
As defaults rise, property values will collapse, leading to a broader housing crisis.
How do we synthesize these insights?
Mitch emphasizes the importance of staying informed and actively engaging in discussions about property taxes and financial policies. The more we know, the better equipped we are to navigate these turbulent waters.
Final thoughts for the viewers?
Every homeowner needs to be active in fighting against property tax manipulations. When we come together, we can make a difference.
As we close, we want to hear from you. What actions will you take to prepare for the future?
Let's keep the discussion going in the comments. Your insights may help others facing the same challenges.
This segment is brought to you by the Sachs Realty Podcast. Today, we're addressing the growing affordable housing crisis and its connection to the erosion of America's middle class. We're thrilled to have Lisa, an expert professor on student debt relief, here for this vital discussion.
Thanks for having me. This crisis is multidimensional and impacts millions. From student loans to the housing market, we're here to unpack everything.
What's the core issue at play regarding our housing crisis?
It revolves around the intertwining of skyrocketing student debt and housing prices. Many Americans are trapped in layers of debt while struggling to find affordable housing.
Let's break it down. What's the status of student debt in America today?
Roughly 45 million people are grappling with this issue, with an average debt of around $37,000. It's a ticking time bomb.
How does student debt impact the housing market?
It's crippling. With low wages and increasing loan delinquencies, affordability becomes a significant issue. The system seems rigged against the middle class.
Looking ahead, what do you see for the middle class?
It's bleak. Without affordable housing and equitable opportunities, the foundation of the middle class is shaking.
What does the future hold for foreclosures?
A surge is anticipated. As debts rise, we may witness many families losing their homes, creating an even deeper crisis.
What can we expect in terms of government action?
There may be calls for significant policy changes, especially addressing the harsh realities of student debt in relation to housing.
As we conclude, what's the overall takeaway?
We need a holistic approach to tackle both student debt and affordable housing. Otherwise, we risk losing the middle class as we know it.
What should viewers take with them?
Engagement and urgency are crucial. Advocating for structural changes in both educational and housing sectors is necessary for future stability.
In closing, we want to know, how can communities mobilize to address these housing challenges?
Drop your comments below. Your voice matters in shaping future solutions.
This segment is brought to you by the channel, where today we'll be navigating the unpredictable waters of the U.S. real estate market and its intriguing forecast through 2025. Is this the calm before the storm, or merely gentle waves in the still sea of housing?
Today's forecast comes from Fannie Mae, packed with surprising insights. Spoiler alert, it looks like the waves aren't crashing just yet, but there's a lot to discuss.
What insights does Fannie Mae provide us with? You mentioned significant changes in home sales.
Absolutely. Their core thesis indicates that home sales are projected to drop through 2025, even if mortgage rates decline. Understanding this juxtaposition is critical to grasping the current market dynamics.
Let's explore the key points. What's the status of home sales?
Current forecasts from Fannie Mae predict a decline in total home sales, but you'd think that lower rates would encourage demand. Not so fast, says Fannie Mae.
What's happening with mortgage applications?
Good question. Applications for mortgages barely budged, posting an 8% dip year over year, despite lower rates. The water remains murky.
Consumer sentiment plays a key role in shaping the market. What's the situation there?
Exactly. A mere 17.7% of people believe it's a good time to buy a home, while 82% feel it's a poor time. Talk about a pessimistic outlook.
And how's the inventory looking?
Inventory is rising, not because homes are flying off the market, but due to stagnant sales and escalating times on the market. We're seeing some price reductions as well.
What's on the horizon for 2025?
The forecast anticipates an 8.3% increase in existing home sales by 2025. That's noteworthy, but they predict rates will dip to around 6%, which adds anticipation.
Let's ponder predictions. What do you forecast happening with rates?
Fannie Mae expects rates to decrease by up to 70 basis points. However, high home prices may still pose a challenge for buyers despite these favorable rate predictions.
What about home prices? Any insights?
Yes, though prices are expected to rise, the rate of increase is likely to slow, revealing ongoing affordability challenges for potential homebuyers.
To conclude, what are those key takeaways?
We have a market with rising inventory, declining buyer sentiment, and a forecast indicating slow growth ahead. Overall, it's a cautious outlook as we approach 2025.
Before we sail away, what do you think of this forecast? Are you optimistic or skeptical?
We want to hear from you. Drop your thoughts in the comments, and let's navigate these waters together.
This segment is brought to you by Bigger Pockets. Today's topic: can you realistically balance a full-time job with real estate investing without losing your composure? Let's dive right in.
Exactly. We're joined by Lawrence Briggs, an active member of the Bigger Pockets community, known for his remarkable investing journey while managing a full-time job.
So what's the essence of today's discussion?
The thesis is simple, yet powerful. You don't need to quit your job to pursue a successful real estate investing career. Balancing both can be a fruitful strategy.
Let's examine some of the strategies discussed, starting with habit stacking.
Absolutely. Habit stacking, like listening to real estate podcasts while delivering food, optimizes your time.
What about market selection?
Optimal choice. Moving to a less expensive area has enabled Lawrence to purchase properties at a fraction of Austin's prices.
And concerning side hustles?
Lawrence smartly used food delivery as a side hustle, generating extra funds to finance his real estate ambitions.
Looking forward, what are some predictions?
We can expect more individuals to consider part-time investing paired with flexible careers. Real estate continues to evolve.
To conclude, the main takeaway is that you can successfully juggle a full-time career with real estate investing.
Absolutely, it's not an either-or situation. Both can complement each other to build wealth and stability.
As we close, we'd love to know, what strategies will you try in your balancing act?
Let us know in the comments. Your thoughts might just inspire someone else on the same journey.
Thank you for joining us. Today's discussions provide a wealth of information on the evolving housing market landscape.
Indeed. With diverse opinions, it's essential to find a path for smart investment and home buying in this uncertain climate.
We appreciate your thoughts. Leave a comment below on your views regarding the 2024 housing market.
Stay tuned for more insights and strategies to navigate the financial landscape.
Thanks for watching Financial Insights in Minutes for August 28th, 2024. If you found this time-saving content useful and want to support the channel, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.